Pristine Collateral, Why Bitcoin Gets Sold First and Bought Back Harder. Flint West reporting. We just lived through one of the most chaotic 12-month stretches since somebody thought subprime mortgages were a personality trait. Everything blew out at once. Tariffs flaring like a political rash, Japan cracking open 30 years of bond market denial, Europe wobbling, China squeezing rare earths, private credit melting through the floor, auto loans coughing up smoke, inflation popping its chest like it's proud of itself, and the long end of the treasury curve screaming like a banshee at midnight. Housing froze. Stocks whiplashed. Volatility didn't spike. It moved in permanently, changed the locks, and started drinking your coffee. And in the middle of this circus, Bitcoin. Silent, patient, stoic, like a fire extinguisher behind glass. See, they always get this part wrong. These geniuses on TV think Bitcoin selling off in a panic means it failed. Look, Bitcoin's down. The dream is over. Nah, kid, that's the design. Bitcoin is pristine collateral, global piggybank, the asset of last resort. You break the glass when the world's on fire. Because Bitcoin is the only damn thing that trades at 3 a.m. on a Sunday when your fund is begging for oxygen. You sell it first because it has liquidity. You buy it back harder because you remember why you owned it in the first place. Every hedge fund, every macro trader, every desk with too much leverage and too little sleep, they all reach for the same thing when the walls start bending. Bitcoin. Not real estate. Not private credit. Not those Frankenstein structured products your cousin keeps shilling. Bitcoin. The only asset that doesn't ask for permission and doesn't shut its doors when things get spicy. And here's the punchline. Bitcoin is married to gold, tethered, linked, like a man walking a dog on a leash. The dog wanders, sniffs around, gets distracted, maybe chases a squirrel, but make no mistake, they're on the same damn journey, same direction, same destination. The only difference is the leash is volatility. Gold moves, Bitcoin amplifies. Gold climbs, Bitcoin leaps. Gold shrugs, Bitcoin screams. That's the game. So while the world spent 12 months in a blender, Bitcoin did exactly what it was built to do: serve as emergency collateral, absorb liquidation shocks, clear settlements when banks were asleep, then coil itself for the next run. And when the dust settles, and it always settles, the buyers come back with vengeance, hunger, and remorse for ever doubting the king. So here's the real advice. No fluff, no MBA jargon, no chart-gazing mysticism. DCA, stack. Then chill. Let the tourists scream and the analysts hyperventilate. You're not here for the noise, you're here for the outcome. The pristine asset gets stressed first, repriced second, and rewarded last. And when the world remembers why Bitcoin exists, well, let's just say the piggy bank gets refilled fast. Bitcoin came for the income, stayed for the outcome. The next chapter's already writing itself. Flint West signing off.